Now, to throw in more light regarding 100% FDI in the insurance sector, we are joined in by Debashish Banerjee, who is a partner at Deloitte India. Debashish, welcome to ET Now, and thank you for joining us.
Good evening. Good evening.
So, Debashish, straight off the bat, government is targeting insurance for all by 2047. Now, how crucial is the 100% FDI limit in actually expanding the penetration of insurance into, of course, different markets across the country, especially the tier 2, tier 3 markets, which are heavily underpenetrated as far as insurance is concerned?
Can you hear me?
Yes, we can hear you.
Lovely. So, absolutely, I think this is a very, very important milestone that India had to take. This was obviously spoken by our, finance minister during the budget, session as well. It's so good to see that this is now cleared and it'll be tabled. I do believe to get to insurance for all by 2047, this is a very, very important, milestone here. The reason I say this is because if you see the number of insurance companies that is there in India is still very minuscule. You compare that with any other, countries. You compare that by the population that is had. I mean, China has almost same number of population, number of insurance companies are almost 4 times than where we are today. So if we have to really expand the insurance sector in India, it is super crucial that we put in more money in here. And FDI and a lot of foreign insurers were looking for this kind of a move. This has triggered multiple conversations at a board level for larger MNCs to relook at India and to pump in more money as well. So it's an absolutely fantastic thing that that we are seeing over here.
Interestingly, you mentioned China and you mentioned how China has 4 times the number of insurance companies as compared to India. So do you anticipate this 100% FDI rule will primarily lead to new entrants, or it's more likely to facilitate buyouts or, even restructuring of the existing joint ventures in the country?
It's both. So, Shivani, I think it will be both. We have already seen some of the restructuring, putting in more money. If you are already a JV structure, that has already happened with Zurich and Generali. There would be multiple more that will be there, in the line. We are already seeing that in the marketplace. But a lot of multinationals who were not present in India or who were present in India in some other form, there we are seeing a lot of new renewed interest as well. We have recently heard about Jio and Allianz sort of coming together. That's almost like an exit and a re-entry. We have heard about Manulife. That's a new company that is coming in. We have heard about Prudential in a new avatar of healthcare. And there are so many more discussions that's going on. Of course, can't share all the names. But these are all in the public place right now, and we are already seeing this happening. So, I mean, if you really think about it, 3-4 years back, when the 49 was moved, when the 49 was moved when the FDI was moved from 49 to 74, we saw close to about 55,000 crores investment in India in a form of either a restructuring or a new venture. We absolutely anticipate that to be, more than that, if not double this time around with 74 moving to 100.
I'm sure after this, news, you must have had a conversation with some of your global clients. What are the primary operational challenges that some of your global clients are flagging off, when it comes to navigating India's complex landscape?
A few things, and this is not new. So after February itself, we have started to have those kind of, discussions, and we are seeing some of it already in the news. But that discussion is going on, Shivani. That's a very, very important thing. Ease of doing business is going to be a super critical thing from their standpoint. that we need to really solve for, right? There are things that we have to solve for ourselves from a country standpoint and policyholders' interest standpoint. That's a separate matter. But from a company's perspective, global companies are really, they are looking at GIFT City, IFC, they are looking at IRDI. There are multiple rules around this. Which ones? SEBI is there as well. So which ones? What are the rules that they need to follow, especially if they are here 100% or 74%? Can they repatriate money back from their profit every year? What happens if there is a demerger, change of shareholders? How will all that play up? I think the clarity around all of these are super critical for the MNCs to look for. The second piece, even though we have announced 100% FDI and we knew this is coming, very interestingly, a lot of these MNCs, when they're discussing with their Indian counterparts and with us and others, they start to realize the complexity that India brings in. And even though there is 100% FDI allowed, many a times they are actually asking for a strategic partner with leadership from India who has managed this kind of a complexity, and that they are really aiming for that sort of a tie-up as well. And that's what we are seeing out there in the marketplace. So I will say three things from an operations standpoint: ease of doing business, what does it mean, blah and blah. The second piece obviously is the leadership, and where do we find the talent, what kind of things they can do here. And third, very important, what are the other regulatory changes? And I think Anurag just mentioned that, when is composite coming in? When is these are all table stakes when it comes to global MNCs, and India has to adopt some of those to really nurture and grow the insurance sector overall. And very, very particularly, there is a large population which is underpenetrated or unpenetrated. What is IRDI thinking on those lines? Will there be liabilities, or will they be asked by these insurance companies from the regulator around these space or not? So those are the kind of questions that we are hearing. Which channel, what distribution amounts, and so on and so forth.
Yeah, and you're absolutely asking some of the right questions. And success, as you also hinted and alluded towards, success of this reform also depends heavily on the speed and the speed of legislative and also the regulatory framework, so to speak. Assuming the bill is passed in the winter session, what is Deloitte's projection for the full operational implementation, including the necessary amendments to IRDAI and the FEMA rules, according to you?
See, it's hard. It's like gazing a crystal ball, but I do know that IRDAI is really very aggressive. I mean, under Devashish Panda's chairmanship, and now with Ajay sir coming in, very focused. They want to move very fast, and we have seen some of this happen in the last 2-3 years. So it's a very different IRDAI. Let's put it this way: in the last 5 years, we have seen some rapid pace. So obviously it's anybody's guess, but clearly next maybe 2 quarters at best. But we should have a fairly good amount of clarity. I mean, in 1 quarter itself, we believe, before the start of the next fiscal. But clearly by next 2 quarters, we should have a fairly good understanding of where it is headed and what it means from an operational standpoint.
Thank you so much, Debashish Banerjee, for throwing in light regarding the 100% FDI in the insurance sector. Thank you for joining us today.
Shubhani, it was a pleasure. Take care.
Well, now it's time for us to slip into a short break on Business at 9. You don't go anywhere. We have a lot of news coming up on the other side.